Welcome back. It's Chris Mitchell at Bitcoin Advisors here. It's a beautiful Wednesday morning in Westlake Village, California, which I do want to follow up from yesterday's short-term time frame on Bitcoin analysis, and I would have gotten trapped here if I were actually trading the short-term time frames, which I'm not currently doing because I'm more or less just hodling. What we got in the short-term time frame was a nonsense, falsehood, fabricated move, a half-truth. So there was one key, the one major massive key, which we didn't really look at yesterday, and that was the NASDQ. And I'm going to bring this up here. We really didn't look at it. And NASDQ, which does pretty much precipitate all major markets, and now Bitcoin falling in line with the NASDQ. So let's check that out right here. I mean, we just broke below this level. Looks like we are selling off this red 10 simple. It's not looking good there, but back onto the trap here on Bitcoin. What happened? We did get a 4-hour closure yesterday above 51,200. We were expecting a move up towards 55,000. That market trap got stifled here at about 52,500. Mostly longs, probably taking some profits. And something I did want to bring up was the Bitcoin. Where was it? What did I want to bring up here? Oh, I'll just get into it right here on the monthly. Bitcoin on our secondary chart here, which is going to be right here. I'm going to take these off so you can get a clear view of what we're looking at on the monthly. If I could pull it up, that was a weekly. Here's a monthly. So in the history of Bitcoin, every time Bitcoin has closed above the top side Challenger band, it has always come back and tested the bottom side Challenger band, currently coming in on Coinbase Exchange at 41,400. There's two ways that this bottom side gets touched. The one way is, we just come down to 41,200, call it 41,200. Or the second way is Bitcoin just green candles its way all the way up to about, let's call it, oh gosh, that isn't pretty. These charts, let's take out a Fibonacci retracement here and see where our target would be. That's not the Fibonacci. And that's the problem with doing these live videos with no editing. You'll see today probably my sound is too loud. And the light is just, I don't know, just right today. We'll see. We'll see when I take a look when I get done with this. But something about YouTube, man. I give my hats off to everybody that does YouTube. It is not an easy show here. I'll tell you that much. Okay, Fibonacci retracement. Let's see where that brings us in. Let's measure it off, just the last 2 months of price action. Or we want to go off of 1 month. Yeah, we want to go off of 1 month of price action. So I don't even like that target. I'm going to scratch that and say, look, if Bitcoin does green candle its way up to about 62,000, which is my actual next target, then we would see probably the topside Challenger band touch there, and then we'd be good out of the clear. But with the way NASDAQ is playing right now, again, we're getting set up for a pretty nasty, what I'd call a pretty nasty downswing here. Taking out this level on a 12-hour. We took it out on, let's see, not quite on a daily. And I'll put back on my other chart here, because here's where, the market always seems to be heartless, without any emotion, without caring, without empathy. And that's the nature of the market here. But What I am taking a look at is on the primary chart here, where we have all of our moving averages. Come on. Here we go. And what I'm looking at on a 4-hour, or on a daily, is it on a daily? Yeah, on the daily, we do like to play off this Cyan 89-day moving average. We can see these were major buying opportunities the last two times it came down and hung around this region. It was a major buying opportunity. So if we can play a bounce off this level here, I'm going to look at that as, a great indicator, and that's the same thing on a weekly. We play off this yellow 21-day moving average. It likes to play off of that. But what most professional traders are seeing is the rise on the 10-year yield, which is up almost 50% in the last 60 days. So since January 1st, we had the 10-year yield at 0.91, and it's risen all the way up to 1.47. And that's why we're starting off with NASDQ right now, which has been the market leader, which has really been setting the tone for everything else. So we don't see a lot of short positions, yet we do see a lot of calls and not a lot of puts, showing that the retailers are still bullish on this market. But I think institutions are really beginning to take some more profits as retailers are still looking at the economy reopening, while the institutions are looking at the fact that the price action has already been priced in. And are taking profits. The institutions were already pricing in the economy reopening. They were looking 3 to 6 months out. And now they're realizing there is a real threat of a tax hike on corporations. Now, really quick, I want to talk about how the interest rates rising and how that plays into gold. Our gold rocks, how are they doing here? So, as we did say, Bitcoin heading south towards our target of about 1680, 1690. This could be a major basing area, a major buying opportunity. If we do break this level, it's not going to look pretty. Gold, the physical gold, probably going to head down towards, somewhere in this region, around 1560, 1570. Another thing playing into as the gold price going down, another theory is people sell gold to cover their losses in the stock market and make their margin calls. And another theory is that when interest rates go up, well, gold doesn't pay a dividend. Plus, I think a lot of people are converting their gold for Bitcoin. And we also want to take a look at the dollar and how does the dollar play in with all of this. And when we're looking at the dollar, we pull up the symbol DXY. And something I want to touch on the dollar is it does look like, we're getting a major reversal here. As you do see that the last few reversals, it likes to consolidate for a few weeks and then boom, pops back up. And a lot of people are wondering why, if they're printing all this money, why are they, isn't inflation coming? Isn't the dollar going to lose value? Isn't gold going to go up? Well, let's say, I print $100, the Fed prints $100 for a round number, and then Japan prints $1,000 today. So U.S. prints 100, Japan prints 1,000. Which currency is going to go up in relation to those levels? Well, the dollar is going to look stronger because we're printing less. And if the dollar's looking stronger compared to other currencies around the world, well, that's when you tend to see the dollar go up and gold go down and stocks go down and Bitcoin go down. And that'll play into the theory that there is this real downside threat of, again, I'll put on the Bollinger Bands here. You can get this Bollinger Band for free right on TradingView. And I am going to provide a link for a referral link if you want to set up a TradingView account. But, you know, that could be a nice, you know, 49,000 to 41,000. And I know that range is not helpful. You know, $10,000 range isn't very helpful, but I just want people to be aware. And my greatest goal is for my clients to be able to think for themselves and start to analyze the market themselves and make their own decisions and begin to, and just because Bitcoin comes down here, I would look at that as a major buying opportunity. Again, it's not financial advice, but this is what I would like to see personally. We could accumulate a lot more Bitcoin down at that level. And I hope that, you know, none of this is really being taken as financial advice, but only as, you know, what I'm looking at to, you know, give you some insight on what the market is doing and why it's doing it. With that, I am going to leave us off today. I hope you have a wonderful, blessed day, and we'll be catching up tomorrow. Thanks, and have a blessed day.